Hello and welcome back to Onchain Reaction with me, James Bennett, the CEO of ByteTree. So let's jump right into it. Prices have surged over 20% in the last week as Tesla has allocated $1.5 billion of its treasury to Bitcoin. Now, this is quite unexpected since Tesla is one of the biggest companies in the world. Elon Musk tweeted, or in fact put Bitcoin as his handle last week, causing the price to spike from about $32,000 to $38,000 before retracing. And then the news came out officially yesterday that they had allocated a large position to Treasury. So looking here, we can see that's pushed price up towards the 50k mark. I think today we sit around 47,000, and volatility continues to rise. So at a similar time as we've seen to June in 20, and then that obviously late stage bull market in 17 and early 18. So up at around 110% annualized volatility. Do be careful out there. A lot of price action happening. Okay, so on to the miner revenues. This is a very, very exciting week because miner revenues are now just $1 million below the December 17 all-time high of about $55 million in a day. So today they stand, as of yesterday, they stand at $54 million. So, getting very close to that all-time high level. You can see that there in the blue bar chart. We're looking at the far right-hand side. That little spike has gone right up there, and this is just extremely bullish for the long-term success of the network. There was obviously the block reward halving in May 2020 that saw the amount of coins that Bitcoin miners were awarded as a reward halved, and we can see that hasn't had a long-term impact on the revenues. How is that possible? Well, because fees have made up a larger portion, and I come back to this message every time that I do this show, and it's a really important one because in 2140 there are no new Bitcoins ever to be minted. So if we want the Bitcoin network to continue to thrive and be a useful network after that time, then fees have to make up part of all of the incentive to miners. So fees have to be significant. And you can see their gold line is a 14-day moving average of fees as a percentage of total revenues. And as I've touched on before, but I want to say that this trend is still continuing, which is that fees are growing as a percentage of revenues up at about 10-12%. And they haven't dropped off as we saw in the Jan 18 bull market. So a real shift in the way that the Bitcoin network is operating. Okay, so jumping on to our next slide here, we've got on-chain core activity is taking the place of it's taking the torch, I should say, from the institutional audience as the retail pile in. So that's not to say that institutional interest isn't growing. We know it is. We've seen fund flows a couple of weeks ago, and we obviously heard the news of Tesla. But what's really interesting here is looking at the rate of change of those core network participants versus high-value traffic. Those of you that have seen this before know top quintile of transactions is there marked in blue, and the bottom quintile of transactions is there in gold, both in US dollar terms. And the core traffic kicked off this bull market in January, February earlier this year, and then we saw from October onwards last year that institutional interest picked up significantly, which drove the rally up towards 40,000. But since the beginning of the year, institutional flows have remained relatively flat. And the core traffic has picked up again, and you can see that by the divergence of the gold line and the blue line on the far right of that graph. Okay, so now having a quick look at the miners. Miners are integral to this to the network, and we've touched on that many times before. But here we're looking at the rate of inventory decline that we've seen in the last 74 days on the far right versus the whole sort of history of Bitcoin, or I should say from 2015 onwards. So what I've tried to do here is show you Bitcoin price in gold so you can pick out the cycles, and then in blue you're seeing the level of inventory that miners are holding. And I've highlighted two sort of trends that occur since 2015. One is from 2015 Jan up to 17. That dark blue line shows the gradient that miners are selling their inventory, offloading their inventory at. And then again, towards the right portion, we've got sort of mid 18 through to late 20. Again, similar sort of decline. Both of those were during the steady phases of the bull market, late bear market going into the next bull market. But what's really interesting here is the rate of inventory decline accelerates towards the end of a cycle. I say the end, here we're looking in mid 17 to early 18 at 360 days. And then again now from sort of November time up to today, we're about 74 days on the right-hand side. But you can see how the inventory decline rate matches in those both instances and is clearly different from outside of those instances. So what does this tell us about the longevity of this bull market? Well, if we're looking at this data alone, which of course we don't, it's one data point out of many, but it suggests that there really is still some time to run in this bull market. Okay, so now my final slide here is looking at a similar sort of thing. So this is the miners rolling inventory. In the last slide, we're looking just at the inventory levels, and here we're looking at the change in inventory levels over a 6-week rolling period. So that's how many new Bitcoins are being mined versus how many Bitcoins are going out. And that gives us a slightly better reading on short-term sentiment from miners who, of course, are a very knowledgeable participant in the market. So what I wanted to just point out here is these spikes in MRI. You can see MRI in blue, and you can see the price there in gold again, with a dotted line horizontally to show the 100% level. 100% MRI means miners are sending out everything that they are mining. If it's above 100%, they're sending out more. If it's less than 100%, they are accumulating Bitcoin inventory. And we can see that through that 17 cycle, MRI peaked 3 times as miners saw the increase in price and quickly offloaded their inventory into the strong market bid. And that sort of indicated the short-term peaks within the longer cycle that we saw. Now, the same pattern appears to be playing out today. We can see towards the end of last year, we had our first peak there as Bitcoin cleared the 20K level. And then we saw our second peak as Bitcoin hit the sort of $40,000 level for the second time. So, as they say, good things come in threes. This also, as the previous slide indicates, that there is potentially quite some more time for this bull market to run, which I expect comes as good news to many of you watching. But as always, when the data changes, we need to change our outlook. So we'll be keeping a close eye on this at the ByteTree terminal. That's all from me. Thank you.